Hello guys, fairbinaryoptions.com, and it is time to take a look at the Great Britain pound US dollar as we ignore the pair lately. We ignore the pair lately because price made or price prepared for a contracting triangle, which I don't think that is going to break to the downside, but I think that this one actually is going to go and break to the upside. Now, like any contracting triangle, this one should travel also between the A and C and B and D trend line. It should have 5 different legs. It should be labeled A, B, C, D, E. But as you can see here, the move to the upside, this move to the upside that makes a new high. This one here, okay, not with this line, sorry. That makes a new high. So basically the new highs that were being made in at the beginning of the year, it is just a contracting triangle, and this is just the B wave of a contracting triangle. From my point of view, the contracting triangle starts here with these highs, and basically we are looking at the move from this moment of time on the right side. How to label this contracting triangle? Well, this contracting triangle goes like this. This to be the first wave here, and it should be labeled wave A. This should be the second wave to the upside, as you can see here, the B wave. The third wave to the downside, so A, B, C wave here to the downside. Now we are looking for a D wave. I would say that the D wave is not done there, so we are looking for a D wave to come around this area. And then an E wave to come, something like this, before the triangle to actually break to the upside. So what we are going to do here is we're trying to set the stage for buying call options. This should be labeled as wave A. This one should be the B wave. The C wave. A, B, C, D, and then of course we're looking for the E wave to come. Now, like any contracting triangle, again, this one should travel between the A and C and B and D trend line. So just taking a short line from here, from A and C like this, and project it on the right side. And the future to come, B and the D trend line. And then of course we should look for the proper place to buy call options after the triangle is being completed, after the D wave. But as you can see, until that D wave to come there, I would say that we have a nice possibility for price to end the week at higher levels than current levels. As you can see, the previous highs here were actually a nice area for the support, to provide support by the time the contracting triangle is going to be completed. Nevertheless, what I would like to do here is to go and buy call options. We're buying call options for another leg to the upside here, so this should be labeled of a lower degree, A, B, C. So we're buying call options for end of week expiration date, as we're looking for an E wave there. But this E wave, as you can see, based on the fact that each and every leg retrace more than 50% of the previous, it is most likely that the E wave will form around this area. So anyways, we'll have bigger chances that at the end of the week price to be higher than the current striking price, and therefore the logical thing to do is to buy call options. So let's write on the screen that we are buying call options with end of week expiration date. That would be Friday, that would be 21 GMT, and that would be, of course, our expiration date. One more thing, this is not a, let's say, regular contracting triangle. It is a horizontal contracting triangle, but as you can see, the B wave is stronger than wave A. This means we are having an irregular variation of a contracting triangle, but nevertheless the outcome should be still to the upside. So thank you very much for being here. This is fairBinaryOptions.com, and all these analyses are being possible due to the help of course, of our sponsor, Lionknife.